Hello everyone, I'm Güllüoğlu. Welcome to another episode of Market Update, featuring by Marketsall and Rationale. Last week, Nvidia released its earnings report, and given that the company is like 6% of S&P 500, it had a significant macroeconomic impact on the financial markets for sure. With Nonfarm Payroll coming up this week, we'll dive into Nvidia's results first, then we'll discuss the potential effects of the payroll data on the market and ongoing economic activity patterns. We'll try to trace those. Before we get started, make sure to subscribe our channel. And if you find the video helpful, please give it a thumbs up. And if you have any question and comments, please leave as a comment below, and we will be glad to answer. First of all, Nvidia reported revenue of 30 billion for the second quarter of 2024 and 2025 for fiscal year of Nvidia. Please do not mix that. It's sometimes it's a bit people don't know, since it's written here a 2025, it doesn't mean it's 2025 Q2 for sure. It's 2024, but as a fiscal year, Nvidia and some other companies go from a forward from upfront system they have. It's about accounting system, and for the second quarter, 30 billion USD revenue. It's reflecting 15% increase from the previous quarter and around 122% compared to the same period of a year ago. The continued development of new, more advanced chips like Blackwell are primary driver of this profitability. Blackwell alone is expected to generate around 7 billion USD in revenue. The company expects third quarter 2024, the next quarter, the revenue to be around 32.5 billion USD with a possible variance plus or minus 2%. After the earnings announcement, the stock price declined mainly because of the market's high expectations. While the overall performance of the stock was solid, it wasn't enough to satisfy the market participants, at least in the immediate aftermath of the earnings release. And the adjusted gross margin and net margin were a bit concerning, which was another point to mention that caused analysts to revise downwards their revenue estimates. The net profit margin has shown a decline compared to the previous quarter for the first time. However, it remains above 50%, which is really a sign of a strength. Another reason for negative pricing might be related to profitability. Its profitability is closely tied to price to earnings or price to earnings ratios, price to sales ratios. This fundamental valuation ratios, let's say. As gross and net margins continue to decline, the company's profitability, which currently justifies the stock's really high price to sales and really high price to earnings ratios, that would also diminish if we see this continuation in decline in profitability. These concerns about profitability are making it challenging to support Nvidia's current high valuation ratios like price to sales and price to earnings. So these are so high right now. Generally, what we do is, in a fundamental way, look at the stock and compare its price to earnings ratio and price to sales ratio with its sector's median price to earnings and price to sales ratios in order to see if the stock is cheap enough, if the stock is overvalued or not. Just those kinds of decisions. It's really high for the Nvidia's case, but the thing is, since the profitability supports the stock, you can justify that really high valuations, okay? And that was the case. And if we see if we see some decline in the profitability side, that would put some pressure on this, let's say, room in the high valuations, and that would be more difficult to justify Nvidia's current price. Okay, let's go with the macro side a bit. On the macro side, Federal Reserve Jay Powell had given his comments on strongest signal on rate cuts are on the way. That's what he said on Jackson Hole Summit, and he emphasized that Fed wants to avoid further weakening in the labor market, and it's ready to adjust policy accordingly. This likely might sound like the end of the inflation fighting campaign. I mean, that will be so solid way of saying this, but for sure, I think, especially as I mentioned in previous 2 weeks, that the focus is shifted to economic activity side rather than the inflation side. While specifics on the rate cuts weren't provided yet in Jackson Hole Summit, markets have responded positively with stocks rising and bond yields slipping. Here in this chart, as you can see in this table, this is target rate probabilities for the end of this year. It shows for 3 to 4 rate cuts, the market's expectation. The market is pricing right now, as you can see. And yeah, when also last week we received some GDP growth data, the real GDP growth here in this table above you see, and below you see real final sales to private domestic purchasers. It's another metric that Fed takes into consideration. And so real GDP growth for Q2 was revised up from 2.8% to 3% on a quarterly annualized rate. And the real final sales to private domestic purchasers also saw an increase, as you can see here in this table, to 2.9%. So in his July press conference, Jay Powell highlighted this measure as private domestic final purchases, which excludes inventory investment, government spendings, and net exports, that often providing a clearer indication of underlying demand. And currently, it's indicating strong demand. That's a good sign for still ongoing bullish scenario for risky assets. On the consumer spending side, that was also revised up from 2.3% to 2.9%, as you can see in this table, partly due to decrease in personal savings. This adjustment aligns with the continued rise in stock price, home values, and interest income, all of which are contributing to increase in wealth and income. The upward revision in personal spending has reduced also recession fears, as it happened in real GDP, like a previous slide, and it impacted positively U.S. index futures. As we see more consumer spending, that gives a good sign on economic activity in U.S. economy. And here you see the weekly initial jobless claim that we got. Here in the below chart, you see continuing claims, and the above one is jobless claims that we receive weekly. It dropped to 231K for the week ending August 2024. Meanwhile, continuing claims saw a slight increase, rising to 1.8 million. Overall, this jobless claims, personal spending, real GDP, all of them suggest that a hard landing is not imminent. And however, the NFP number scheduled for release on this Friday, which will be so crucial, it will provide important insights into whether a soft or hard landing is more likely for upcoming period, and also Fed's decision on future rate adjustment that will be so crucial. So for this week, apart from the NFP number, PMI numbers around the world is being watched closely. It gives signs on the health of the economic activity, the demand side, and yeah, we're gonna receive also JOLTS job openings. And as an indicator of NFP number is ADP non-farm employment numbers going to come. Also, we're going to receive a rate decision from Bank of Canada, which is expected to cut rates by 25 basis points. And these are important events that have potential to create some volatility. Apart from that, within the non-farm payroll data, the average hourly earnings, especially monthly one, will be crucial in order to track the wage price spiral, which has a pretty important impact on service inflation, which seems like under control, but the concerning part. Remember that average hourly earnings is a really important indicator for the inflation. Despite that, inflation is more like out of the scene compared to economic activity. For sure, it's within the dual mandate of Fed. That's why it's so important. And also, we're gonna get like a participation rate, which is the indicator of supply and demand in the labor market, which is given, like Fed gives pretty importance on that side as well. That's why that will be important as well. So let's flip through a few charts that I want to show as maybe trade ideas that I had mentioned before, or like some trade ideas that I want to give like now. First of all, let's start with Euro USD. As you can see, this was the trade idea that I had given in previous videos. A symmetrical triangle, this breakout, it's already acted, but still, like this pullback, current pullback, gives maybe another chance to get in. And yeah, with like this symmetrical chart pattern broken out, and the mentality will like behind being long in euro compared to, let's say, USD or Canada side, is more about like euro areas, like inflation risk is relatively higher to US side or Canada side. Yeah, due to that, it doesn't mean that they have an issue with inflation. It's problematic. It's in the problematic region, but it's relatively like that. And with that said, we would expect euro, like ECB, to act a bit slower than Fed or Bank of Canada, let's say. With that mentality, first of all, rate differential side, it gives an advantage to euro compared to Canada dollar, Canadian or USD. That's first thing. And with that said, Euro USD long idea is still intact for me, and currently it's traded around 20-day moving average, 21-day moving averages. It's short-term trade moving averages. It acted really fast. We might see a further consolidation around here, and we might see this 50-day moving averages average also to converge to the price, and like that might also create a buying opportunity. And still, I don't see any action that might, on the macro side, that might disrupt this trade idea. And with the same mentality, Euro-Canada parity, Euro-Canada currency pair, there's a nice like a symmetrical triangle chart pattern. It's already broken out, pulling back right now to old resistance and current support, as you can see. Here acts as a support right now. And I don't know, like a really tight game, like with 60% stop, just below this line, this dotted line, could be nice trade idea with the mentality. Because also, apart from this interest rate differential between Euro Canada, oil also does not support Canadian dollar. As you might all know, like Canada is like a really major oil exporter, and as demand for oil increases, for sure Canadian dollar demand increases. It's not the case for now, considering the global economic activity, weak global economic activity, let's say not prosperous global economic activity, that doesn't support as well, and potential long idea might be played here in this one as well. And here also technically 50-day moving, with around 50-day moving average, and yeah, still like being above that level is also supportive. While speaking of oil, let's check this trade idea that I had given before. First of all, I would like to show you in the weekly chart. This is symmetrical triangle, okay, but here is not the best one, but you can call it like head and shoulder top reversal chart pattern. That's the major chart pattern, let's say, here in a potential breakdown. But here you can play out this in the daily chart, this symmetrical triangle chart pattern. As you can see, this is broken down right now. Let's see how's the close, like this daily close. But being short in this one with a tight stop with the highest point of, while I'm recording Tuesday, 3rd of September, highest of this level is, let's say, 74.45 levels. That might be good play, also being short in oil. And while speaking of Nvidia, we saw after the earnings report, we were like 8% down, and currently today is 6% down. Yeah, like being below this short-term moving average is not a good sign for sure. But I was expecting maybe potential reversal and to establish a head and shoulder continuation chart pattern. It might still work, but we need to see some consolidation around here. But this selling is not good. Like also here you can see my volume indicator. I used TA plot volume indicator, which is like pretty nice build up. The red bar shows like a pretty high sell volumes. Blue lines positive 5-day pocket pivot volume, and green ones are 10-day positive pocket pivot volume. That's why it's really like a nice indicator. And as you can see, having a red volume bar here is not a good sign. And currently today seems like a big sell volume going on here. That's a bit concerning, but I would be expecting for some consolidation if I want to be long on Nvidia. And Meta, here there's an ascending triangle chart pattern that might be like a potential trade idea here. A potential breakout of this chart pattern might be played out. And yeah, it's just still like challenging around like 21-day moving averages, 50-day moving averages are still above its short-term moving averages. And a plan like this could be applied, but yeah, still we'll see if this price continue to rise. But I think this ascending triangle chart pattern with a potential target of this chart pattern is 30% above this line. Let's say it indicates like around like a 700 levels. And Tesla here, when you go to the weekly chart, as you can see here, there's really potentially it's not established yet, but head and shoulder chart pattern here. If it manages to continue up until 265 levels, this line is pretty valid though. And in the daily chart, a potential breakout from here might be first bet in order to get this level while waiting the main breakout with some bullets in your pocket. And that might be a nice bet around breakout around here with a tight stop around here. Depends on how this price is going to be consolidate here. But yeah, a potential move like this would build a head and shoulder continuation. And yeah, like Tesla, that's I think worthwhile to watch. And considering also it's like still lagged compared to other like let's say Magnificent Seven or the stock market in general. And yeah, that's all I'm gonna talk about this week. Thank you for watching, and thank you for your time in general. Hope you find these videos helpful. If you find these videos helpful, as I mentioned in the beginning of the video, please like give it a thumbs up. Please like leave comment if you have any questions, and if you have any requests from us, we would be glad to answer. I wish you a really nice week, and have a great day.